Hi, I'm Stan, the Annuity Man. Let's talk about fixed index annuities. What, when, why should you buy one? What's all the hype? Why is everyone that I'm meeting trying to sell me a fixed indexed annuity? Good question. I'm going to go through indexed annuities in a series that you are going to find fantastic if you've ever been pitched one or considering one, or even if you own one. But regardless, I'd like to send you my fixed indexed annuity owner's manual. It's a book that I've written along with 5 other owner's manuals. I send them to you for free so you can fully understand what these products are all about. But we're not going to do anything until you hear the music. All right, here's the shameless props. Number 1, the phone. You should go to my site, theannuityman.com, and schedule a call with me if you want to discuss fixed index annuities without the sales pitch. It's just me and you one-on-one talking about them, if they fit, and getting your expectations in line with the contractual realities. The other shameless prop is this calculator. If you go to theannuityman.com and you talk with me, I'll run quotes quoting all indexed annuities to find the best one for you, whether you just want a standalone fixed annuity or if you want one that also has an income benefit. I can do both, but the bottom line is work with me one-on-one in a non-pressure, non-salesy environment. Yes, I am the top agent in the country, licensed in all 50 states, but with these products, with all annuity products, they're contracts, and you have to fully understand that contract. All right, my mantra is you own an annuity for what it will do, not what it might do. Now, with the indexed annuity product, it's a little different because the will do is the principal protection. You know, a fixed indexed annuity is a fixed annuity issued by a life insurance company, and it's approved at the state level. It's not a security, it's not a market product. You don't have to be securities licensed to sell it. Literally, you can get your license in some states in 1 week to sell it. I'm not sure that's a good thing, but it's just reality. But they were put on the planet in 1995, indexed annuities, to compete with CD returns. And since that 1995 time period up until now, that's pretty much the return scenarios that you see. Now, how does an indexed annuity work? And another part of this series on indexed annuities, I'm going to go through all of those caps and spreads and participation rates and all that stuff, just so that we kind of get to the business of that. And you need to get my book that I showed you earlier, Fixed Index Annuity Owner's Manual. But the bottom line with the indexed annuity return scenario is it's based on a call option, and you get a limited part of that return on that call option. That doesn't mean it's a bad thing. That return can lock in permanently. But for what, when, and why you should own an indexed annuity, I personally like using them as a very efficient delivery system for what's called an income rider. At the time of application, most indexed annuities allow you to attach an income rider guarantee. Now, visually, how it works, if you draw a line down of a blank sheet of paper, this side's that index option side, that principal protection, but we don't know what that return is going to be on an annual basis. And then this other side is the income rider side. That's the guaranteed income benefit. 2 separate calculations. This side's the real money side. In other words, if you wanted to cash in, that's what you could cash in. The income rider is kind of monopoly money, a phantom account that you can only use to calculate lifetime income. Some also you can use for death benefits or confinement care, but we'll get into that later in part of this series. But what you need to understand is it's not too good to be true, like you hear at the Bad Chicken Dinner seminars. It's not too good to be true, like you hear on the Saturday morning radio shows or the TV commercials. You have to put your thinking cap on and understand that annuity companies have the big billings for a reason. They're not going to just give something away. They're going to price it so that it's pro-customer, but it's not too good to be true. Hey, just to drive home the point a little more brutally, as they say, annuities are contracts. Yes, I made a sign for it. That includes indexed annuities. So you need to understand the contractual guarantees of that policy. With indexed annuities, if you're interested in a specific one, or we talk on the phone and you say, you know what, I kind of like that one, we can send you a specimen policy on that product and the application if you want to see that as well before you make a decision. And the other one I like is buy the steak, not the sizzle. That's a big one with indexed annuities. You're saying, Stan, you made up signs for this? Yeah, it's that important. It really is. Because you're going to hear with indexed annuities some of the best sales pitches of all time. Let me give you one I got the other day. A guy called me up and I wrote it down. I'm pretty familiar with it, but this was a pretty good one because whoever was pitching it just synopsized all the sizzle and they forgot to do the steak. So let me get to that. All right, so here's the pitch. Here's what he told me. He said, the guy said to me, Stan, this index annuity will get, I'm going to break this down just section by section. This guy said, I'm going to get a 10% bonus for signing up. Cut. What does that mean? That doesn't mean there's some philanthropist at an annuity company that's trying to give you money. Just wake up in the morning and go, you know what, I think I'm going to give the public money. No, it's part of the overall contractual guarantee. Sometimes the upfront bonus will increase the contractual guarantees that you're looking for, sometimes they won't. So here's the next part. You're going to get market growth with no downside. Cut. That's not true either. You're going to get no downside, but most of the time with index annuities, the vast majority of the time, they're designed to compete with CDs. So the vast majority of the time you're going to get CD type returns. Will there be some years that it might be a little bit better than others? Maybe, but the blended return is going to be CD or a little bit better than CD type returns. If you go into index annuities thinking that, it's going to be a good product for you. Here's the other one. You're going to get free long-term care with it. Cut. First of all, long-term care is another side, is another product. It's a healthcare product. It's not an annuity product. What they're talking about, the annuity agent is talking about confinement care, meaning that if you get sick and you, in some cases, can't do 2 of the 6 daily functions of life, which is feed yourself and clothe yourself and bathe yourself, I mean, life stinks anyway, they're going to increase that payment. In other words, they're going to give your money back quicker when you get sicker. So let's go through that sales pitch again. You're going to get a 10% upfront bonus, you're going to get market upside with no downside, and you're going to get free long-term care. Well, I've just blown all of that up right there. So if it sounds too good to be true, it is every single time. That doesn't mean that those specific things in that sales pitch are bad. They just have to be explained for the factual and contractual guarantees that they give you. So, you know, be careful out there with index annuities because a lot of agents are going to tell you what you want to hear. They're good products if used properly. In my opinion, if you said, Stan, I want principal protection and maybe a little bit better return than CD, and you're okay with maybe 1 year being a 0, because sometimes that happens, then an index annuity works. Or if you said, Stan, I want a lifetime income stream in the future, 5, 7, 10, 15 years from now, then we're going to quote income riders attached to indexed annuities that provide that contractual guarantee. In those specific situations, they certainly fit. We would quote other products as well to make sure you're going to find the highest contractual guarantee possible for your specific situation. But in essence, fixed index annuities are not too good to be true, but they're pretty darn good if you understand them for their contractual guarantees and the transfer of risk benefits that they offer. Here's another thing you need to know about indexed annuities. They're not bonds. A lot of people are out there pitching indexed annuities and saying, you know what? This index annuity works like a bond. No, it does not. I'm a person that's been working in the industry for a long time. A long time ago, I was with Morgan Stanley, Dean Witter, Payne Weber, UBS, all those big street firms. And I manage bonds. I understand bonds. Indexed annuities are not bonds. Bonds have a specific coupon that you can peel off and not touch the principal, and it's contractual coupon. And also, too, they're tradable. You know, there's an open market for that. People that are making that correlation with index annuities or bonds, I think are pushing the envelope. I'm assuming they're trying to do the best they can and sell things, but it's an apples and oranges comparison. A fixed index annuity is a CD product, period. If you're looking at a fixed index annuity, you should also be looking at a multi-year guarantee annuity, which is the industry's version of a CD. Both of those, indexed annuities and multi-year guarantee annuities, work very well together because they protect your principal and they're fixed annuities. And with index annuities, if you don't attach a rider, there's no annual fee. There's no annual fee on MIGAs. So if you want full principal protection and CD type returns, then your two choices are fixed index annuities and multi-year guarantee annuities. They work well together. But the what, when, and why, and where, and how, and all the stuff that you're hearing about index annuities, put on your thinking cap. Don't be pressured and pushed. These are contracts. They're CD products that put on the planet in 1995 to compete with CDs. That's exactly what they do. And also remember, they are very efficient delivery systems for income rider guarantees if you want future income as well. I would encourage you to go to my other part of this series on fixed index annuities. I've done a series on this that kind of goes into all of the spreads and caps, the riders, etc. in addition to this video. I would encourage you to watch the full series. The other thing you need to do is set a time to talk with me. Go to theannuityman.com. I also have podcasts on this topic. I've written a ton of articles on this topic. But at the end of the day, you need to talk with me. So you're not buying the dream, you're buying the contractual reality, and we can match you up with the right indexed annuity that fits for your specific situation.